Hey everyone, checking in on the market. So we had a gap up open in SPY today. It's the tech sector that continues to run the market, and that has been the story for years at this point. And as I've said many times before, if the tech sector is not going to see weakness, the market is not going to see weakness. So we have our daily higher lows still holding. We have had daily higher lows pretty much at this point holding over 2 months in a row. Let's call it 2.5 months. We did break by a couple pennies over here, but it was essentially a triple bottom, and I disregard a couple pennies when it's that close. So we have our new higher low at 286.71. As long as this level holds, the bulls remain in full control, and we're going to test the all-time highs. I'm a little bit surprised that the SPY bulls saw so much strength today, as the financial sector has seen weakness 2 days in a row, and some of it is obviously, or the majority of it is the tech sector. But we've also seen the energy sector with a little bit of upside as well, so there are other factors in there as well to keep an eye on. But the bottom line is we're going to test that all-time high, 291.74. If we cannot break that level and we pull back and lose the hourly uptrend, we will look for a daily equilibrium pattern to form and the middle Bollinger Band support to come back into play again. Keeping an eye on the MACD, the weekly chart is still all bull in a potential bull flag, holding exponential supports. IWM on the daily chart, still struggling a bit. We do have a support level at 169.33, and we have pretty much a triple top, 171.68. 60 and 54. So I need to see the bulls break 171.68 to see some follow through on this bounce, but very clearly we are not as strong as the S&P 500 and we're not as strong as the tech sector. So right now IWM is the weakest of the markets, and that's not saying much because if I looked at it by itself, it's still an extremely bullish chart. It's just comparative to the other names, it's a little bit weaker. It is still a bull flag on the weekly time frame at this point. So key range I'd be watching is 169.33. If that level breaks, we're going to be looking down at the, let's see, anything above 165.15. The bulls will still maintain the weekly uptrend with strength. And in terms of that resistance, again, that little triple top, 171.68. So here's QQQ, and we're further from that all-time high than SPY is, so the odds of a daily equilibrium and a lower high being set are more likely, and there's a lot of individual names in the same pattern, potentially looking at Netflix and Amazon and maybe even Apple. There's a lot of individual names that have the same setup for the potential of a daily equilibrium. If we lose the hourly higher low pattern, we're looking at the potential of that equilibrium forming. So if that is the case, if we lose the hourly higher lows without breaking all-time highs, we're going to look for this equilibrium pattern to continue to tighten into next week. Tomorrow's a pretty important day as to whether or not we can see follow through or if we do start to see some consolidation. Weekly time frame, still a potential bull flag on QQQ as well. All bulls is the bottom line. And unless we lose the low of this current consolidation on SPY and on QQQ and XLK, if that does not happen, the bulls have absolutely nothing to worry about. XLF, still seeing weakness. So we lost the daily higher low pattern here. The lower Bollinger Band, the 50-day and the 200-day moving average are all lining up. The next clear support level is 27.61. We're still a good bit above that, but it's clear that momentum has shifted on this weekly time frame and we're pulling back. The most important level now is 27.61 because that is the lowest price that we've seen in the last 6 weeks, and that is our weekly higher low. So the bulls really want to maintain that level, and if we lose that level, it's going to be a bit more downward pressure on the S&P 500 that will slow down the bulls even if the tech sector remains strong. Keeping an eye on VIX because there's a potential of a nice daily equilibrium pattern here as well. The odds of it being an equilibrium pattern will increase if SPY and the tech sector are as well, but it's the low, high of the bounce, higher low, lower high, and the bulls are looking for a higher low compared to 1165. Potential to bottom fish that level tomorrow. We'll have to see how the pre-market trading goes, but I would love to see this pattern continue to tighten into next week because the tighter an equilibrium pattern gets, the more likely you're going to see some decent follow through when that break does occur. If we were to see a bear break right from here, we've already seen 4 red days in a row, and we've already pulled back from 1488, and that break of 1165 would essentially be a 25-30% pullback before that support level even breaks. So I wouldn't expect a whole lot of follow through, whereas if we see a higher low form and then a lower high and then a bear break, the bears will not have traveled as far, meaning we get that follow through. So the tighter the equilibrium, the better the break usually is. I appreciate you watching. We'll see if we check back in tomorrow. See you then.